Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's Monday morning while it's pre-Diwali festivities for everybody. The markets are not quite in the festive mood, at least today, because the world markets are a bit soft. Now, lots has happened. Let's take stock of the global news flow first. Xi Jinping, and in the 16th October plenary speeches, when he started off, he said that China's power has increased and warns of dangerous storms and that China will be able to navigate these. He also says there is no change in course for the COVID and housing policies that have kind of held back China's growth. In fact, went out and praised that zero COVID policy that China has had. It may have an impact on growth, but for now, that's the policy. US has put restrictions on semiconductor employees in China. What I mean is employees which work in semiconductor companies in China. Now, for a lot of people, this is the um, big trade warfare, if you will. And could this actually morph into something even more serious? That is the worry. Because that has an impact on valuations, even if it's between US and China, it has an impact on how the market perceives risk assets and thereby valuations. So watch out for this. Watch out for this space in particular, viewers. There's some bit of reading material around it on our website as well as with other websites. But yeah, I think this is a really big deal. So do watch out for that. And just let's get that played back in the last piece of news. The 10-year yields rose briefly beyond 4%, 4.1% before settling at about 3.9. 3.99 was, I think, the last that I saw. And we'll get the yields up in a moment for now. But yeah, I think this is the sum and substance, I think, from my perspective on global news flow. Oil is kind of steady as she goes. So the US markets, bad day on Friday, in the green at the futures that is currently. And the banking results, which came in JP Morgan, Wells Fargo, etc., City were slightly better than what the street was working with. But be that as it may, uh, these are the other cues. The dollar index 112.84, VIX at about 31.5, for 10-year yield just around 4%. So yep, we are now seeing the 4% mark on the US 10-year yield. And Fed person Bullard, James Bullard, left the door open for large hikes in the month of December as well. The SGX Nifty should be indicating a start in the red, shouldn't surprise anybody. We will start off weak. The question is, do we build on from there or do we kind of say subdued? About 0.8% is where we are likely to start off as per the SGX Nifty. Now, what's the trade setup therefore for the day in a scenario like this, which is actually a very busy week from an earnings perspective for India, by the way. Keep that in mind. Uh, if you look at the last 1 month, viewers, there are fairly large gaps that are happening, and which kind of hinder overnight traders, confidence of the overnight traders to take positions, whether options or futures. Now, in the last 1 month, it's happened about 8 times that we've had very large gaps, northwards of percent and a half, or maybe 2% at certain cases. But yeah, percent and a half seems to be the adequate one, and which hinders directional trading. If you just look at the last 1 month, you will actually get to see these very large gaps that the index seems to be having, which kind of hinders any large directional positioning. Bank Nifty has been outperforming the Nifty. Strong banking results could actually aid that outperformance even on a dull day like today. Uh, HDFC Bank, the reaction to Federal Bank, broking notes, etc., could all help that. The support levels for the mid and small 400 index is much lower, and therefore treading carefully out there is advisable, mind you. The support zones much lower, and therefore not necessary that we might see mid caps and small caps finding some support at slightly lower levels. That level is some time away. Dealers speak of very much of caution. Sorry, it's not too caution, of caution. My bad. But dealers speak of caution in global metal and global auto names. Now, auto names. It's not too many people who said that, but the smart money that I speak to spoke about the possibility of this happening if indeed there is a bit of a breakdown in Chinese semiconductor manufacturing because of US employees resigning and kind of paralyzing that space. I know a lot of WhatsApp forwards have moved around, but the news is clear and present. I mean, it's here, and it's a bit of a clear and present danger. So I think it's a space that needs some monitoring. So do watch out for that. Now, what are the results that are slated to come out today? ACC is the big one, of course, not an index stock, but coming out. PBR is interesting. Tata Metallics and Tata Coffee are the other ones. What about stocks to monitor today? Well, I will watch out for Federal Bank. I know people have looked at the numbers already, but I just thought I'll bring in some highlights there. So, one, it's reported the strongest quarter with beat on all fronts. The NIMs were at multi-quarter highs of 3.6%, and the FY23 loan guidance is 18 to 20%. That's a big one from a Federal Bank perspective. Now, it's a bit of a breakout as well technically. I think a 5-year breakout, if I'm not wrong, if you look at the charts, and brokerages are bullish. So let's bring up, I think, Morgan Stanley. We have the Morgan Stanley view on Federal Bank. The rating is overweight. The target price has been raised to 165. Is saying that the NI growth should sustain or improve with the LCR at 140% and better loan mix. The better loan mix would offset a potential faster rise in term deposit cost, which would be true for most banks, by the way. And they raised the earnings estimates by 4 to 6% over FY23 to 25, owing to stronger PPOP growth. I think there is merit in looking at the kind of activity that Federal Bank would do. Some classic moves there. Actually, if you just look at what's happening, viewers, to a lot of these small or mid-sized banks, right? Leave RBL Bank out. That's got a special situation. But Federal Bank, IDFC First Bank. I think I'm forgetting the name of the third one, which I remembered pre-markets or the pre this show. But yeah, there are two or three of these banks which are actually starting to do really well on the operational front, and markets are lapping them up. So do watch out for them. So that's the first one. Speaking of banks, HDFC Bank has to come into mention today. The numbers came out on Saturday, well post market hours. NI is up about 18.9%, PAD up 20%, PPOP growth remained modest at about 10%. The asset quality improved, led by moderation in slippages and healthy recoveries as well as upgrades. And again, no surprise that brokerages have taken a good view on HDFC Bank. Let's get the name that we have. Yeah, Nomura on HDFC Bank. The Q2 FY23 beat on low provisions. Thrust on growth, further decline in provisions would aid bottom line. Forecast 15.5 and a 16.2% EPS and core BV CAGR over FY22 to 25. Again, the bank putting its best foot forward, likely, and it's showing in the way the results have come out. Now, a lot of people are talking about what's the view on banks, right? And especially some of the others, like ICICI Bank. It's a crowd favorite, frankly, ICICI Bank. No surprises thereof. Kevin is asking the same question. And most, if Kevin or anybody else, if you hear any of the interviews that we've done in the recent past, be it Alpha Mughals interviews or the other interviews, you will hear a common thread that banks are a favorite simply because the valuations are not terribly expensive and the growth seems to be there. The balance sheets are very healthy currently. They can support any kind of capex growth, and earnings growth will look strong. Remember, deposit rates haven't been raised, but lending rates have been raised. Your and my home loan rates are already higher, and as a result of which, the NIMs will look very strong uh, at least until this quarter, which is quarter 3. Then they might raise their deposit rates a little bit. You might see some bit of moderation in quarter 4, but moderation from higher levels on the NIMs front. So banks certainly look like a pocket which will likely do very, very well. So do watch out for the banking names for sure. Um, what else? So we've spoken about the two banks, Federal Bank as well as HDFC Bank. Now let's talk about Bajaj Auto. That came out with numbers which, well, to some people it did well. To my mind, maybe left a bit to be desired. In some sense, did Bajaj Auto. The revenue is up 16%, EBITDA margin 17%, versus the Bloomberg estimates of about 17%. Net profit up 20% at 1530. The estimates were 1437, so it beat estimates. Motilal Oswal also goes out and says that the dividend yield of 5.5% would actually support the stock going ahead. So it is something that traders may want to watch out for. Bajaj Auto, some people are talking about the stock looking good. I think I saw one weak note as well on Bajaj Auto. So mixed bag, if you will. Maybe the stock reacts well. If it does, you know why. There's a beat on the bottom line. And there are brokerages which are saying that from a price perspective or dividend yield perspective, it looks like it is a stock that will find some support. So do watch out for that one. Avenue Supermarts, subdued operational performance, you would have to say. Profitability below consensus estimates. PAT aided. Discretionary product mix, of course, was lower. compared to pre-COVID levels, heading to lower gross margins. The higher OpEx further impacted EBITDA margins. PAT was aided by a tax reversal in respect of earlier years. Imagine the tax rate was just 8.3%, as a result of which PAT may look subdued or optimally high. It may look higher optically, but uh, maybe for a stock which is as expensive, it needed to do slightly better. Frankly, speaking of expensive stocks, Tata Elxsi is the other one, which probably needed to do more and didn't. Look at the numbers. They'll come up on your screen next. Revenues up 5%, but the EBITDA margins cracked, and the net profit as a result was down about 6%. This is quarter on quarter. A lot of people compare Tata Elxsi YOY. I think QOQ is better. Now, the highlights, right? The deal wins were strong. The revenue visibility, there is revenue visibility for the next 4 to 6 quarters. The highlight of the Q2 print was the strong headcount addition, which was up 15% quarter on quarter, speaks of some management confidence about the quarters ahead. But the margins cracked. So those were the two opposing highlights. And um, and stock trades at about 60 times. 60 times FY24 expected EPS, over 60 times, 65 times. Now that's quite something. It's not a cheap stock. I'm talking about FY24 estimates, and still it trades so expensive. So maybe, just maybe, Tata Elxsi might have a bit of a crack in the session today. So do watch out for that one as well. What else? There is stock. I mean, I haven't spoken about LTI or Oberoi Realty. Those numbers, LTI did, I think, it is modestly okay. Oberoi Realty had a bit of a chink in its armor, so maybe those stocks could have, no, just dial. I thought was an interesting set of numbers, and maybe the stock reacts slightly positively to its numbers. So that's something you're going to watch out for. It came back rather strongly, you would have to say. Just dial. It was a good comeback, I thought. Gross profit up 10% quarter on quarter. EBITDA up 102% quarter on quarter. PAT really well, 52 crores versus 33 crores YOY, or negative 48 crores quarter on quarter. So, did okay. Let's wait and watch if Just Dial has a supporting move in the session today. Couple of other stocks in news include Z Entertainment, wherein shareholders have. Okay, so yeah, sorry. Shree Cement. No, Virat, my bad. Let's pull up Shree Cement once, and then we'll get to the other stocks in news. Weak numbers. Revenues up 20%. EBITDA margin cracked, though this was known, and I think the management's verdict on why this has happened and what could happen ahead is very important. Net profit down 67%. Brokerages have said that it's a miss, so people might be a bit skeptical about what could happen to Shree Cement in the session today. No surprises thereof. Some other stocks in news include a Z Entertainment, wherein shareholders have approved the proposed merger of the company with Sony, or Tata Steel, which is, amidst all these rumors of a shutdown in the UK operations, is saying that it's actively engaged with the UK government for financial support, as per the PTI. So do watch out for these two names as well. Now, that's the long and short of the trade setup today. A bunch of conversations now today and through the week, viewers. Remember, there are three sets of conversations that we'll bring to you this week. One, the Future Today conversations. The summit happened on Friday. Some of you attended. Amongst the headline conversations was Ridham Desai of Morgan Stanley. So his conversation is what we'll bring today at 9:30. You might want to tune in and try and hear why Rhythm, or whether Rhythm believes that it'll be an India decade. And through the week, we'll get you some of these Future Today conversations. So do watch out for this one today. Also watch out for TCS conversation today. Rajesh Gopinath, CEO of TCS, speaks at 8:45 a.m. Not just about numbers, really, beyond numbers. So he's in conversation with my colleague Sajid Mangat. So you might want to tune in for that. We'll make you hear Narayan Gangadhar, who is the CEO of Angel One, talk about whether the peak prowess of earnings for brokerages behind them, or it's still there. So you might want to hear that conversation. And at 2 p.m., Debashish Chatterjee, who is the MD and CEO of Mindtree, will be talking about what led to Mindtree doing so well, where some of the others could not. It'll be an interesting conversation to try and get gauge about what's the demand scenario looking like, and whether Mindtree, which had last time predicted that they only have visibility until the first half, whether they're talking about some visibility in the second half or not. So a bunch of very interesting conversations lined up today, all through the day and all through the week, by the way. Very busy earnings week. A lot of Diwali conversations. Alpha Mogul's Diwali special. as well as the Future Today conversation. So it's a packed week on BQ Prime, as well as the other platforms, I'm sure. So, but you might want to stay tuned to us because getting you some very interesting conversations also this week. Thanks so much for tuning in today. Trade safe.